On today's show, what to expect for December, are mega caps about to lead again, SMCI is building the roadmap for getting away with fraud, and Trump is at it again. But before we get into the show, a message from Jerome Powell.
1, 2. J. Powell's coming for you. 3, 4. I'll rug this floor. 5, 6. Your portfolio is shit. 7, 8. I choose your fate. 9, 10. Get rug pulled again.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks had a very bifurcated day. Reminds me of the trade we saw in 2023. Tech, the Magnificent Seven, software and semiconductors outperforming deep in the green. The broader market, everything from defensives, industrials, even financials, healthcare in the red. This was really what we saw in 2023 when the market had very, very poor breadth. And we just saw outperformance in the big names, the quality names, Google, Meta, Tesla, Amazon, Apple, Microsoft, Nvidia, the Magnificent Seven, as well as semiconductors as a whole, software, and a couple of outlier names in every sector. Stuff like Visa here in financials, Eli Lilly in healthcare. And that was really it. The Magnificent Seven outperformed. There wasn't really much to say. XLK, the complete outperformer, the winner, up 1%. XLY, XLC up 0.9, 0.77%. The SPY beat every other sector except those three, up 0.19% today. So it really goes to show the weight in just these three sectors to lift the SPY up on a positive day when every other sector was red. Again, outperformance, a clear breadth mismatch, but that's because a lot of the Magnificent Seven names last week kind of fell under the radar compared to the broader market. And so we're just seeing that rotation happening again. This isn't a market with a lack of breadth. This is just the market doing what the market does best. And when we do actually look at it on the factor and size spectrum, what we really saw was not necessarily outperformance in large caps. While we did see that, we really just saw outperformance in growth, relatively speaking, to blend as well as value in small, mid caps and large size, and do actually expect this type of trade to continue for the first half of December. Looking at the S&P 500 seasonality pattern, what we should really expect the market to do between now and the middle of December is pretty much trade sideways. You could say you have a slight upward bias, and then from there we're going to put in a higher low, very similar to what we did in November, and then we should go to the promised land from there. Average returns in December 1.55%. 82% of the time December's finished positive when the previous year has been positive. So very, very strong performance in December, but we should expect a very mixed trade like we saw today during the first 15 days of this month. From there we will move onward and upward. But looking at some of the market movers today, Intel was up as much as 4% because its CEO retired or resigned, or maybe he got ousted. We don't know, but we do know that the market did like this initially, and then we actually did see a little bit of a pullback to the lows. All in all, Intel's next CEO has a big job ahead of him. Supermicro, another big mover, up 28% today. The stock jumped to a session high, gaining more than 30% after the server maker announced that the final findings from an independent review of its business found no evidence of fraud or misconduct. The evidence reviewed by the special committee does not give rise to any substantial concerns about the integrity of the company's senior management or audit committee or their commitment to ensuring that the company's financial statements are materially accurate. So, they paid an independent committee to come out and say there's no fraud. But guys, don't touch this company. There is 100% fraud there. Don't want your money here. Don't ride the trend. Just keep your money away from SMCI. Go buy Nvidia or any other semiconductor in this space. What also really did help the market move today, at least some of the positive momentum we saw, was actually from the manufacturing data, the PMIs. US manufacturing activity is slow slowly climbing up from its slump. On Monday, ISM manufacturing PMI showed a reading of 48.4, an increase from 46.5 seen last month, and above economists' expectations of 47.5. This marked the highest reading for the index since June 2024, though notably the reading coming in under 50 indicates an overall contraction in the sector. Yes, we beat expectations, but this is still a contraction net year over year. The sector has been above the 50 mark just once since October 2022, but Monday's reading could be early signs that better days lie ahead, according to Jefferies US economist Thomas Simons. And he said, looking ahead, we see significantly more positive signs for the US manufacturing outlook than negative ones, Simons wrote to his clients on Monday. Rate cuts will also slow into next year, but more are coming. The Trump administration is focused on doing things that it thinks will improve US competitiveness in manufacturing, including deregulation, a more accommodative tax environment, and protectionist tariffs. The jury's still out on the net benefits of the tariffs, but the other positive forces are unambiguous. So all in all, manufacturing activity looking very strong. And if this continues, this is going to be a tailwind for the stock market. We also had a couple of Fed speakers speak today. The big one was Waller. He came out and said some very dovish things, but he did hedge his bets. He leaned towards supporting another rate cut in December. However, he may change his mind if inflation data surprises to the upside. And I quote, "But that decision will depend on whether the data we receive before the next FOMC surprises to the upside and alters my forecast for the path of inflation. I will be watching the incoming data closely over the next couple of weeks to help me make my decision as to what path to take." FOMC is on the 17th of December. And so this week with employment data and next week with retail sales and inflation data, we have to look very closely at what's to come, because all of this data right now will determine if we get a rate cut in December or not. So if we get like a huge upside surprise in NFP in the employment labor data this week, like we did with maybe the PMIs, that could really change the course for a rate cut in December. But if we get weaker than expected data, that probably means the rate cut is on the table. It's going to be very interesting to see how all of this unfolds in the next couple of weeks. And guys, something to note with the seasonality chart I showed you, this FOMC aligns with when the market normally ramps. So if we do get a rate cut, that's going to be a further tailwind for equities. But you do have to understand we are in a rate cutting cycle, we are in an easing cycle, and that's going to really support equities for most of 2025. Looking globally, the global market was also very green, similar to the US. In fact, more green. Europe was very green. So too was Asia, China, Southeast Asia, not that green, very weird. And then Australia and New Zealand green as well. South Africa, very positive day, but they've been a bit of a dumpster fire for the last 10 years. So take it as it comes. And looking at market breadth continues to remain strong. We see a little bit of noise across all of these indices. We did see a little bit of a downtick in certain moving averages, but all in all, breadth is strong. And when you see this type of breadth, any pullbacks we do get in the market, you want to buy those dips because higher prices normally ensue. Strength begets strength. Momentum brings momentum. It's a very hard platitude to believe, but it simply is the case. And that is why I've been bullish all year. I've been saying buy dips all year, and that has served us very well up until this point. And any dips we do get from now up until the 15th of December, buy those dips because the end of year run is coming. Things look really good for equities and risk assets. And you just want to buy the dip and don't trip. And looking at the charts, we had, like I said, a very mixed day. Large caps outperformed, particularly the Nasdaq 100 up 1.1%, the S&P 500 up 0.24%, but the IWM and the RSP were down 0.5 and 0.25% respectively. We are seeing some positive momentum here in the after hours. So that goes to say that a lot of this momentum we're seeing is not even like necessarily a pullback or bearish sentiment. It's just a little bit of a rotation we're seeing back into large caps. And that's sort of what I said at the start of this week. I said, if we look at the S&P 500, it's trading at its core resistance, when if we look at the Nasdaq 100, there was still upside to get to their core resistance, especially on Friday. This was the candle on Friday. That's exactly what we're seeing right now. So we're going to see probably more upside momentum to the core resistance here in the Nasdaq 100, and we may see the S&P 500 trade slightly flat to down, with the RSP and the S&P 500 outperforming the Nasdaq 100. However, going going down the spectrum, we did see the dollar gain up 0.56%, huge move back above the 106 area, and that coincided with some very mixed action we saw in yields. The 30-year yield fell ever so slightly, but the 10-year and 2-year gained. As a result, bonds fell and commodities fell as well on the back of a stronger dollar. That's exactly what you want to see. Now, Bitcoin was down 1.67%, and that was on the back of Michael Saylor buying $1.5 billion worth of Bitcoin. He's bought something like $23 billion worth of Bitcoin this year. Very crazy. So even his buying isn't really supporting the Bitcoin index right now, and it's still hovering just below the 100,000 mark. It never got there. 99,944 was the all-time high for Bitcoin. I do think we break the 100k Bitcoin mark and probably 200k sometime into the next couple of years, but slow and steady wins the race, and it's going to take a bit of time to get there. We've had such a massive run this year in Bitcoin. It's just going to see a little bit of consolidation. That's what we normally see with stocks. We see a rally, consolidation, a rally, and then consolidation. So do expect us to probably trade sideways for the next couple of weeks, maybe even the next couple of months before making the next move higher. Looking at the S&P 500, relentless, no consolidation, higher highs, higher lows. That's all this market has done all year. And for those of us that have been invested, it has been a very good year. Right now, we should expect to see slightly up to sideways price action in the S&P 500, and then we'll make our next move above the 6,100 and beyond area. That's what I'm seeing right now. In terms of what it could actually mean for this week, it's really going to depend on the data, but looking at where we are with the core resistance and the gamma flip, there's asymmetrical downside. We probably do see a little bit of downside. Now, I'm not saying we're going to sell all the way to the gamma flip, because that's a 120 point move, right? That's nearly a 2% move in the S&P 500 if we were to fall. I'm not saying that's going to happen, but I am saying there's probably a little bit of downside, if anything, sideways price momentum in the S&P 500 before we make the next move higher. We sort of got to churn out all of the options activity, have the core resistance and gamma flip move higher. That's something we haven't really seen yet in the S&P 500, but we saw that in the Nasdaq 100. The core resistance did move up ever so slightly, and compared to Friday, we did see material upside, and that's why I was really bullish into the Nasdaq 100 coming into this week. We actually did post an intraday high in the Nasdaq 100. You love to see that. That's extremely bullish, and some of these bigger names are actually making all-time highs. If we actually just go to Apple, right? Apple had a record high today. That's an all-time high, an all-time high close for Apple. You love to see that, and that's on the back of strength we saw in Nvidia as well as Microsoft. All in all, things looking good for large caps as well as mid caps and small caps. Look at the RTY. It was pretty much flat today, up 0.14% in the after hours, so up net. We did, however, see the core resistance move down ever so slightly, and we're seeing this consolidation pattern right here at the highs. Constructive, if you ask me. I think we definitely see buyers come in at the lows right here, and all we're going to do is consolidate sideways like with the S&P 500 for the first half of December, and then we'll make the next move higher in the IWM. I do think we're going to see all-time highs for the Russell 2000 in the next couple of weeks, especially before the end of the year, and that's circa around the 2500 area, right around here. That is all-time highs for the Russell 2000. All in all, guys, equities look really good. Mid caps look really good. The RSP, the equal weight, looks really good. Equities are just consolidating all of the gains they've had for this year at these highs and looking for the next move higher, which is going to come around the middle of December. So what do you want to do in this period? Sit through the volatility. Don't get shaken out of your positions. Buy the dip. Don't trip. And diving into sentiment, this is the sentiment survey, a question I posed on my YouTube channel. If you want to be a part of these, go ahead, subscribe, and you'll see them in your feed every single Saturday. And I asked, how are you feeling about the S&P 500 here in the month of December? And the overwhelming majority, 70% of you guys, said you were bullish into the month of December. Very crazy stats. So there is overwhelming bullish sentiment into December. There's a clear lack of bears, and only 15% of you guys are neutral. It really goes to show the type of environment we're in. And that's because stocks are rallying, and they probably will continue to do so into December, into the end of the year. Guys, when we've had a November 19th to November 31st greater than 1.5%, in 2024, we returned just shy of 2% in this period right here. And normally that suggests very good returns for the full year thereafter. 12 months later, we can actually expect 15.86% in average returns, 22 wins, 3 losses. In this entire period, there was only 3 losses. One of them was 2007, 2008, right? And that was because of the GFC. There was structural issues in the economy back then. And then we had a down year in 1969. That was the inflation scare. And then 1960 was only down 2%. So history and seasonality is on the side of the bulls. When we have a very positive turn of the year, end of the year, we tend to see a bullish year. And strategists see that too. The average S&P 500 price target for year end 2025 is at around the 6,800 mark. Now, this is in contrast because if you look at 2024, the average implied expected return for the following year at the start of this year was 1.36%. So pretty much strategists didn't see much upside for 2024 in the S&P 500, and now we're up 24% for the year. Absolutely crazy. And you can see right here that strategists are very bullish. The Identity Research has a 7,000 price target. BMO has 6,700. We have a couple of others here at 6,600. It really goes to show the bullish momentum we're seeing in the market. But I do think there are places to look outside of the S&P 500. And this is investment themes I like for 2025. Now, if you're looking for outperformance, I really think you want to be in the equal weight or the S&P 400 mid caps, as well as US companies, AI phase 3 type of companies. So these are companies with the potential to monetize AI primarily via software and IT services. I'm looking at companies like CRM, Pexa Group, Microsoft, Google. These companies should outperform in 2025. In terms of value, I actually do like materials and utilities, European telecoms and real estate, as well as US REITs. These are very cheap and great value plays that I think will do very well in the environment coming up. Internationally, I like Japan. I like the UK. I know it says US. This should say the UK. The FTSE 250. I really like that index. European companies exposed to the US. That will do very, very well. But in this instance, you probably just buy like the US counterpart, something like Adyen or LVMH or ASML. Those companies, you just buy the ADR, they'll do very well. And I think China, we should see a pretty good recovery in Chinese names into the end of this year, into 2025. And then when it comes to income, I think you really want to stay away from bonds and maybe look into these income ETFs. 2 of them that I like that won't erode the NAV, that avoids that NAV erosion you see with these option selling ETFs is SPYT and GIAX. I'm actually going to build out a $12,500 position in each of these. I'm going to have $25K to start the year off in each of these positions. That should net me about $500 in income every single month. I really like these 2 ETFs. I've done a ton of research. I think it's time for me to dip my toe into these income ETFs. Nonetheless, this is how I think you should be positioned into the end of the year. This is really where I'm positioned. Paycom Software, right? PayPal, Pexa Group. I have a lot of small cap quality ETFs. I do hold a lot of mid cap companies as well as AI companies right in my portfolio. I do have a lot of my ETFs have international diversification in these right here. And I'm also going to pick up some SPYT and GIAX into this month of December. I'm going to build up that position and into early next year. So all in all, I think this is where you want to be positioned. It's investment themes I like for 2025. And something that's not on here, I also do like gold, silver, as well as Bitcoin. But I was trying to keep it just in the equity space more specifically and not really go into bonds or commodities or alternate investments. Now, diving into the macro, guys, and we have a Donald Trump tweet. He's already influencing the world in the macro, and this was actually quite significant. He said the idea that BRICS countries are trying to move away from the dollar while we stand by and watch is over. We require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 100% tariffs, and they should expect to say goodbye to selling into the wonderful US economy. They can go find another quote-unquote sucker. There is no chance that the BRICS will replace the US dollar in international trade, and any country that tries should wave goodbye to America. Very, very strong You gotta love the fact that Donald Trump stands up for the US. And here's the thing, exports to the US are significant for some countries. So if they cannot sell to the US, that could be a major hit to their overall economy. And we're looking at countries like Mexico, Vietnam, Canada, Taiwan, Malaysia, Thailand, South Korea, South Africa, huge gold, this country, technologies in these countries, cars and manufacturing from these countries, semiconductors as well, Germany, Japan, Netherlands, Peru, Italy, Philippines, China, India. So this is something that I think a lot of these countries are going to take seriously, and we're going to see some action throughout this week. So it's definitely something we want to watch. And looking at Black Friday, something I showed you on Friday's video, guys, there is foot traffic declines in major department stores, a trend we've seen since 2021 into 2022 upon COVID, and we continue to see that in every single department store listed here, except for Nordstrom, which saw minor foot traffic increases net. Now, I do ascribe this to a multitude of reasons, but I think the biggest is actually that online is growing quite significantly. Black Friday sales online hit a record $74.4 billion in sales. That was up 5% from the last year. So take this with a grain of salt. I think more people are just buying online as well as buying early. We now know that Black Friday sales start like 2 or 3 days actually before Black Friday. They also extend like after Black Friday into the weekend. So I think you really got to look at the week leading up to Black Friday as well as the week after. And that's really going to determine what these sales periods actually look like. The consumer is smarter now. And that's why I say instead of looking at data like this, we really need to look at what retail sales is going to look like for the month of November. When we get the Red Book data tomorrow or Wednesday, we'll look at that too. But all in all, Black Friday looking not so strong in the department stores, but very robust movement online, especially a 5% print. You love to see that. Now, looking at earnings for the rest of this week, tomorrow we have a big week. We have Scotiabank before the open. Then we have Salesforce and Okta, both reporting after the close, as well as Marvell, Pure Storage, and Box. So we have some very big names, particularly Salesforce and Okta, as well as Marvell, really going to move the tech space, software, and semiconductor space. So a big day for tech. We'll see how that pans out. Looking at data for the rest of the week, on Tuesday, tomorrow, we just have the JOLTS opening. That's a pretty big print. And then for the rest of the week, we just have a bunch of employment data from the ADP to imports and exports, initial jobless claims, and then non-farms on Friday. But looking at JOLTS, the number we're looking for, guys, is 7.38 million. That is a forecast. If we hit that, Bob's your uncle. And it's onward and upward from there. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Cheers.